Saturn Metals, Apollo Hill Gold Project. We're working very hard to make this Australia's next new virgin open pit mine and operating heap leach gold deposit. That's the hill in front of you. I'm going to give you a little bit on its history. I'm a geologist myself, ex-Newmont Mining Corporation, where I saw some of these heap leach assets work very well. And this particular gold deposit has some beautiful strengths, which I think we can really leverage into a bulk mining scenario. Located in the heart of Western Australia, key points on that slide are some 1,000 square kilometres, 100% owned, good infrastructure, road, rail, gas pipeline, good gold infrastructure, a fantastic district recently for corporate activity, and a multi-million ounce gold belt in which we hold a central strategic land position. Strengths on that slide, a cash position at the moment well north of 60 million. There's several figures up there, I'll let you do the maths. It's still a bit slow this morning for me. Institutional register, well north of 55%, probably in the high 50s now, heading up towards 60, across multiple jurisdictions from Europe, Hong Kong, Singapore, North America, and I guess a pretty tight share base given the fact that we've been listed for 8 years, which we've done through an excellent discovery cost per ounce, discovered and converted at about 8.9 ounces for every metre we've drilled. And our project valuation and our market cap are starting to narrow at a gold price much lower today. Our studies were done at 2,665 Australian. And need I mention today's gold price, because I know lots of other people will have this morning. All our ounces are contained in one single, simple, low strip, and when I say low strip, 1.5 to 1 in that resource pit, open cut pit, large selective mining units, which means low unit mining cost, economies of scale really kick in. And that blue pit there is not too different to the last cut back on the super pit in Kalgoorlie. So a very big deposit, really leveraging off some economies of scale. Since inception, we've grown the deposit year on year, and not just in terms of size. If the past is a predictor of future, I'm going to show you some of the exploration potential at the end, but also in terms of quality. You see the gold in the red bars come in. As we move closer to production, we've converted a lot of that into measured and indicated as we really bring the quality and integrity of that deposit up. If we take a look at a slice through the deposit, one of its biggest strengths is its low strip ratio, or I should really say waste to ore ratio, so the white bits there. On the pit floor, we see ore zones which are upwards of 100 metres wide, which converts to less geologists running around the pit floor, lower dilution and edge effects, much simpler blasting, simple open pit scheduling, all of that pushing the cost structure down. Ore from surface, as you can see there, so straight into payable dirt. And a very big, strategically sized, consistent ore body. So its mining geometries are one of its biggest strengths. Second biggest strength is probably one of the cleanest, simplest metallurgies or geometallurgies that I've seen in any deposit worldwide. All our gold in every instance is contained as grains, which means they're easily digested in quartz. Always in the quartz, which means they're easily liberated. And some fantastic recoveries there just with heap leach alone, which really means crushing alone. So we don't have to grind. We see economies come in from lower energy costs. We don't have to build a big mill. And every deposit crushes rock anyway, so we kind of stop there in terms of our cost structure. No carbon, no copper, no arsenic. So very low cyanidation and low agglomeration. Great percolation on the heap because it's all fresh rock. So I think this is really going to set Apollo Hill apart. All that converted into a preliminary economic assessment now coming up to a couple of years ago, and the PFS is due out in December this year, of about 10 million tonnes for 10 years, producing about 122,000 ounces per annum in a flat, elegantly simple production schedule and scenario. And we saw that done with some quite conservative metallurgical characteristics where we'd doubled our heap leach stacking ratio, leaching days, we discounted our recoveries, and I suppose that 122,000 ounce per annum is backed by some very nice low costs. So the costs were only crushing, our production costs come down to about $9.40 to a tonne. And I think we were quite conservative in the day. So in December this year, I think we probably did our homework quite well. I think we'll see that stay still in the PFS. Mining costs, probably the best of the best in our belt on traditional sort of Archean deposits, which tend to be a bit more selective, is about $5.50 a tonne. So at about $4.50 a tonne, as those economies of scale and those big diggers kick in, we see that economics produce a very nice all-in sustaining cost. That $24 a tonne at our highest predicted gold price when we did this study of 3,500 Australian, that works out at a margin of about $21 a tonne. Now, $21 a tonne kind of sounds okay for moving a tonne of rock. The kicker here is $21 a tonne times 10 million tonnes per annum equals a free cash flow of $210 million per annum. This is a margin volume business, and we're moving big volumes at a very respectable margin, and we see some fantastic cash flows coming. The numbers on the right are really what we looked at in terms of that 2,665 gold price. We saw an NPV there of around 388 million, $90 million free cash flow. Started to see some decent payback metrics, bankable metrics. The numbers on the left, at 3,500, which we left behind a long time ago, we're starting to see $1 billion project and very rapid paybacks. And I think there's a brief mention of today's gold price below it. So this is a strategic size asset, a big long life mine, and I think on a world scale, the gold bubble there is Apollo Hill in terms of some of our North American peers where we see these assets more typically. We've arrived in terms of grade, scale, deposit size, recovery. We're up in the upper quartile of heap leach deposits worldwide. We've done our homework on our cost structure, and I'm delighted to be able to pull the PFS together in the next couple of months. So we've had Caps Cassidy, who are world-renowned heap leach experts out of the US and the Americas, where we see these type of deposits working on the study. What you see in front of you is, I suppose, a much improved version of the PEA in terms of there's extra, like there's a gyro crusher in there, upgraded, better screening, better HPGR, 2 cement silos. Really what that's about is delivering a consistent product to the heap leach pad, which is your processing plant, and that consistent product really talks about your recovery. And I think we're going to see a very nice, robust study. The final pit shape starting to take position in the back. If I zoom out, we can see the big heap leach pads, the pits, and tiny little processing plants down there in comparison to some of the things you've seen, just the crushing plant down in the distance. Exploration this year, we've seen some fantastic results. So I'm going to circle some numbers: 22 at 3, 16 at 6.35, 38 at 2.18. Thick, high-grade assays all the way around this deposit, which is actually a 0.5 gram asset. So there is a real architecture within this, and we're going to have a look at that and see what underpins it. But some of the best results we've ever seen is we've done that infill drilling of about 70,000 metres, and we've really seen this deposit come together. We've seen a pattern emerge, and we're going to show you where we're going to take that next. Very simply, if I drew a line down there, which you can imagine if you're a geologist is a bit of a fault, to the right of that, we see orange blocks, red blocks, pink blocks. That's your kind of bulk mining scenario. To the left of that, we're seeing pinks, purples, and even the blacks, which are the really high-grade shoots, which you can see coming through the deposit in several places. What's made that change? when we drilled this in probably June, July this year, which I think was just about the time the market was turning and it really grabbed everyone's attention, all we were really looking at was that little zone down there. There's some beautiful results coming out of it, and you can see that there, 11 at 6.29, within a very broad, very suitably grade, open pit grade deposit or intersection. So it was out on its own with a lot of rigs on site. We could hit it really hard and really demonstrate to the market what was there. But I'm going to take the opportunity to go back now, 54 metres at 3.7 in 2021, 2019, 2025, 2020, all the way through this deposit's history, we've seen this higher grade architecture appear. This year, we've been able to join it all up, and we see quite a beautiful pattern emerge. If we focus in on Iris again, what makes it great? Very simple geology lesson. One geological structure, which we see going off up there. Another geological structure coming down there. And where the two cross, two plumbing systems come together, bang, more gold, better grade, better thickness, fantastic. The geologist in me starts going, right, what do I like next? I draw that one down through there, I need to be drilling there. I draw that one down through there, I need to be drilling there. We turn the lights on, or the drill holes as I like to call them, and we'll have a look at that again. We see some beautiful lead intersections, Structure comes north. This one here is one of my favourites. Look at these beautiful results all the way through there. There's another one there. And then we go after these target points. There's another one straight through there. So really what we've done is just unlock the exploration potential and the higher grade exploration potential of this bulk deposit. And ultimately, I see a footprint in terms of alteration and mineral intersections. And we're just looking in 2 dimensions near surface at this point. Never mind what we're going to drill at depth within the deposit. So as we speak, we're drilling lines all the way through here now as a priority, and I do think we'll see some very nice geology come out in the coming months. Beyond that, let's not forget the regional exploration picture. Just as we've seen a fantastic pattern there at the deposit scale, if I start to draw my geological fault structures and lines on this one, we'll start to join up the dots and we'll start to look for intersection points and targets. 40% of that land package hasn't had a result. So far, we've found about 16 new prospects outside of the tiny little bit you've been focusing on today. 2 of those have got some real legs. This system down here, I think, is going to be akin to what we're seeing at Apollo Hill. We're going through the land access on that at the moment with the heritage work and the clearances. But watch this space. I think this next year, with a serious budget in hand, we're really going to give this land package a bit of a shake, and I don't think it's impossible, given the multi-million ounce deposit terrain we're in. I think that pattern's getting better and better. We're getting our eye in, and we'll see if we can find something transformational even beyond Apollo Hill. Finally, PFS delivered in December this year, definitive feasibility study delivered in October next year, and then we're into our financing and project development for commencement and construction the back end of 27, early 28, subject to regulatory approvals and financial investment decision. And without further ado, and 46 seconds left, that's it. Thank you very much.